All right, so today we're diving into The Intelligent Investor. It's basically the Bible of value investing, written by Benjamin Graham. Huge influence on tons of investors, most famously Warren Buffett. This deep dive, we're going to try to extract like the core ideas, help you guys understand what intelligent investing is really about.
Yeah, I think what's so interesting about Graham is that his principles, they're timeless. They stand the test of time, even in today's crazy market.
Absolutely. And I think one of the things that he really hits hard on right out of the gate is this distinction between investing versus speculating.
Totally. It's like, think about it this way. Speculating is like gambling.
Yeah.
You're betting on short-term moves, hoping for a quick win, driven by emotion.
Right.
Intelligent investing is like building a house on a solid foundation.
You're looking at the long term. You're looking at the fundamentals. So how do we figure that out? How do we figure out what that intrinsic value is?
That's where Graham's 3 core principles really come into play. First one is thorough analysis.
Okay.
Due diligence.
It's detective work.
Exactly. You're digging into the company's financials, track record, management team. Are they making money consistently? Do they have a sustainable business?
Right. So we're looking beyond the marketing. We're trying to figure out what's really making the business tick. Okay, so that's principle number 1, thorough analysis. What about principle number 2?
Diversification. You know the old saying, don't put all your eggs in one basket.
Right.
Even the best companies can face unexpected challenges. Think about like the 2008 financial crisis. People who put all their money in just a few stocks got absolutely hammered.
Yeah, and that's a really good point.
Yeah.
Because you think, oh, this company's doing great, but something unexpected can happen. So we diversify to protect ourselves from those big hits. Okay, so diversification, super important. Principle number 3.
Patience and realistic expectations.
Okay, so we're not talking about get-rich-quick schemes.
No. Intelligent investing is a marathon. It's about building wealth steadily, safely, over the long term.
I like that. Now, another thing that Graham talks a lot about is market history. Why is that so important?
Because history repeats itself in the markets.
Okay.
Market goes through cycles, booms and busts.
Right.
We saw that. In the dot-com bubble, people got caught up in the hype, ignored fundamentals, lost a ton of money.
Yeah, so by studying history, we can try to identify those patterns and hopefully not make the same mistakes.
And he talks about this idea of Mr. Market.
Oh, yeah.
This like fictional character who's
Right.
always trying to sell you something
Right.
at
And
a different price every day.
emotional.
Yeah, he's moody. He's unpredictable.
They're like that friend that's always like, oh, I got a great deal for you, but you got to be careful.
Exactly. The intelligent investor
Yeah.
doesn't listen to Mr. Market. They make their own decisions.
Based on their own research. So we've got these principles,
Mm.
but how do we actually put them into practice?
Well, Graham outlines a couple of different approaches. One of them is defensive investing.
Okay, I like that. Safe and steady.
Yeah, it's perfect for people
Yeah.
who prioritize minimizing risk. So he recommends a balanced portfolio, typically 50-50 split between high-grade bonds and a diversified selection of stocks.
So bonds being that steady eddy, stable income stream.
Yeah.
And stocks, potential for growth, but obviously more volatility.
Exactly. You're balancing risk and reward.
Okay.
And within that stock portion, you'd want to spread your investments across at least 10 different companies with a proven track record.
Okay, now I'm already feeling a little overwhelmed. Like, I'm not a financial expert. How am I going to pick 10 different companies?
Well, Graham has a tip for that too. He calls it the simplicity of choice. Look at established investment funds and see what they hold.
Oh, okay, so I can kind of piggyback off of their
Brilliant.
expertise. But before I do any of that,
Yeah.
one thing I'm remembering is that Graham also says it's important to consult with a financial expert.
Absolutely. A good financial advisor can help tailor your strategy to your specific goals and risk tolerance.
Okay, so we've talked about this defensive investor, more risk-averse, wants to play it safe. What about the people who are willing to take on a little bit more risk for the potential for higher returns?
That's where enterprising investing comes into play.
Okay, let's talk about that.
It's still about the long term. It's still about diversification. But instead of that 50-50 split, you might be 70-30 or even 80-20 stocks to bonds.
Okay, so you're turning up the dial, a little bit more risk, potentially more reward.
Exactly. And with enterprising investing, you're not just buying and holding. You're actively looking for undervalued opportunities.
Okay, so how do you find those?
One way is to look for companies that are temporarily out of favor.
Yeah.
Maybe they had a setback or their industry is facing challenges.
So you're looking for kind of like a diamond in the rough.
Exactly. Let's say there's a company, tech innovators, they do cutting-edge AI, they have a great track record, but they miss their earnings target, and
Right.
their stock price plummets.
Yeah, the headlines are, Tech Innovators Stumbles, Investors Flee.
Right. But an enterprising investor might see that as an opportunity. They dig deeper, they analyze the financials, and they realize that earnings miss was due to a one-time expense, not a fundamental problem.
So they're not just looking at the headlines, they're doing their own research.
Exactly. They see that long-term potential, and they're willing to buy at a discount.
They're betting that the market will eventually catch up.
Exactly. And this is where that principle of buying low and selling high really comes into play.
Right, but how do you know? When the market has hit bottom.
There's no crystal ball.
Right.
But the intelligent investor understands that market sentiment can be irrational, especially in the short term.
Yeah, you see people panicking,
Yeah.
selling off their stocks.
Right. And that's when an enterprising investor sees an opportunity. They're not swayed by fear. They're focused on that long-term value.
So it takes discipline to stick to your plan.
Absolutely. And then when the market recovers, as it always does, you're positioned to reap those rewards.
Okay, so buy low. But what about selling high? I feel like it'd be really tempting to just hold on to a winning stock.
It is tempting, but the intelligent investor knows that trees don't grow to the sky. They have a system for deciding when to sell, maybe a target price or a change in the fundamentals.
So you have an exit strategy.
Right. The goal is to generate consistent returns, not to get emotionally attached to your stocks.
So it sounds like,
Yeah.
with this enterprising investing, there's almost like a game to it.
Well, Graham would say no. He says intelligent investing is serious business. It requires diligent research, careful analysis, a long-term perspective.
So it's not about trying to outsmart the market.
No, it's about making informed decisions. And one way to practice that is to do what Graham calls virtual investing.
Virtual investing.
Yeah.
What is that?
Basically, find a website that lets you track stocks without actually putting real money down.
Okay.
Pick a few companies, analyze their financials, make buy and sell decisions.
So it's like a flight simulator
Yeah,
for investors.
Okay.
You can test your skills.
without risking your money.
Okay, that's a cool idea. So we've talked a lot about stocks, but Graham also talks about other types of investments, like bonds, real estate, even gold.
Right. He emphasizes diversification, not just within your stock portfolio, but across different asset classes.
Okay, so building a well-rounded portfolio.
Exactly. Bonds can provide stability. Real estate can be a good long-term investment. Gold can act as a hedge against inflation.
So it's about finding the right mix of investments.
That meets your individual needs.
And this is just scratching the surface of what Graham covers in The Intelligent Investor.
It's a lifelong journey. There's always more to learn.
So we've got to stay curious, keep educating ourselves.
Yeah, and one thing that's really important is the psychological side of investing.
Oh, yeah. The emotion.
Fear, greed, all of that.
How do we manage that?
Graham says it's crucial to have a solid investment philosophy, a set of guiding principles to help you make rational decisions.
So even when things get crazy, you have something to fall back on.
Exactly. And he also emphasizes patience.
Right. It's a long game.
He compares intelligent investing to planting a tree. You wouldn't expect to see fruit overnight.
You got to give it time to grow.
Exactly.
And of course, we always recommend seeking advice from a trusted financial advisor.
Absolutely. They can help you navigate the complexities of the market.
So it's like having a financial coach in your corner.
Right. But remember, it's still your money. You're responsible for your own financial decisions. So as we wrap up this deep dive into the intelligent investor, I'm curious, what resonated with you the most?
I think for me, it's Mr. Market. That really stuck with me. To think about the market is this like emotional being who's not always rational.
Yeah, it's such a powerful analogy.
It is, and it reminds you that you got to do your own research, think for yourself, not get swayed by the crowd.
And it brings us back to, the question I asked before, what kind of investor do you see yourself as?
I think
Yeah.
after this deep dive, I'm leaning a little bit more towards the enterprising side.
Mm-hmm.
I like the idea of trying to find those undervalued opportunities,
Yeah.
but I also see the value in that
Yeah.
defensive approach, having that solid foundation.
Yeah, and there's no right or wrong answer. It really depends on your own personal circumstances, your goals, your risk tolerance.
Right. It's got to be something that you're comfortable with.
Exactly. And remember, intelligent investing, it's a journey. It's not a destination.
We're always learning.
Always adapting.
Yeah, and one of my favorite quotes from Graham is, "The intelligent investor is a realist who sells to optimists and buys from pessimists."
That's so true.
So good. Reminds you to think independently.
And remember, building wealth takes time. It's not a get-rich-quick scheme. It's a long-term commitment.